Hey there, welcome to another Credit Card News live stream. I'm Cal Barton. It's good to see everybody today. I just want to shout a few people out. DJ Bruce Wayne, how are you doing? Danny Boy, F Davis. Oh, I want to read a few of these. So you said ready for the stream. You got the wallet and you appreciate that. Well, listen, you're welcome, Danny. I'm glad you like the wallet. It's a good early Christmas gift, and Merry Christmas to everybody. EHJ23 said, good evening, queens and kings. Hope all is well and safe. Blessed with all of you and your families. Happy Merry Christmas to everyone. Listen, thank you for spreading all that love and joy. I appreciate that, man. You make every stream, and it really brightens up tonight. And then who do we have here? Jewel Clark. It's good to see you. Fressa. Plumber, Miss Barton, yes, it's good to see everybody here. And I don't want to forget anything here. Yeah, Cinemanis, you said, hey Cal, what are your thoughts on the AMC Visa credit card release in 2023? And you said, I'm a huge fan of AMC. You're an A-lister, so I'm not familiar with their rewards program, but we're gonna talk about that tonight. We're definitely going to be talking about that on the stream, and I have a few thoughts on that, and I think you can already know where this is going, but yeah, we're going to talk about it. So let's get into the news. So actually, we're not going to start with that. We're going nearly 82% worry about their credit card debt. An early December survey from U.S. News and World Report shows that more than 8 in 10 Americans who have credit card debt are experiencing anywhere from little to a lot of anxiety about it. Nearly 31% have at least $6,000 of credit card debt, and 15.1% have credit card debt of $10,000 or more. Wow, I didn't know it was that high. So that's a good amount of people. 10,000 or more. I would be, I'd be sweating a little bit at that point. A majority, 51%, have seen an increase in credit card debt this year. The most common reason given for credit card debt is the combination of rising costs and insufficient income. Well, listen, I just want to stop right there. You're always going to have insufficient income if you always start spending more when you make more. That's called the hamster wheel. That's called, lifestyle creep, right? And so a lot of people don't understand. You could make $100,000 a year, but if you spend $101,000, then you're really in the hole by $1,000. So you can't go ahead and get the Tesla and get the Beamer and a Mac mansion and expect to not be foot to mouth or what do you call it? Not be check to check there. And people don't understand that that's the issue. So the second and most common choice was unexpected expenses. An overwhelming majority expressed some degree of stress about credit card debt, from a little bit, 33%, to medium amount, 27%, and to a lot, which is 21%. So unexpected expenses are something that they definitely happen. And that's really what credit cards, kind of make a little bit easier for you, because there is that 25-day grace period. So you do have a little extra time. You don't have to spend that money directly out of your debit, out of your checking or savings account. But then you have a few weeks to figure out where you're going to pull those funds from. And it's nice to actually earn rewards for those big purchases too. I recently had a flat tire, right? And that was, I remember, years ago when I had a flat tire, it would be like, $150 or something like that. But as time has gone, it's gotten more expensive. So I think I paid like $260 to get that flat tire fixed and to get a brand new tire. And it's good I put that on a card, but then I immediately paid it off the next week. And it's just good to have get those rewards. But you definitely want to have enough money in savings or in your checking account at the time to take care of those unexpected purchases. So you can't, you just can't. I know it's so hard to do, but you just can't spend more money than you have, and you can't spend all the way up until, what's on your paycheck. So you definitely have to manage yourself. It's so hard. I liken, just like Dave Ramsey talks about this, people talk about eating too much, and I feel like this is the same difference. You got to be able to step away from the table and not eat too much. And you also got to be able to put the credit card, put the cards down and not spend too much, because you can't overdo it, and you have to have self-control and discipline. So next story, we have share of Americans living paycheck to paycheck rises to 63%. So as rising prices continue to weigh on households, more families are feeling stretched too thin. All right, they're stretched too thin, guys. As of November, 63% of Americans were living paycheck to paycheck, according to a monthly Lending Cup report, up from 60% the previous month, and near the 64% historic high, which was hit in March. So that was still in the same year. Even high income earners are under pressure. Of those earning more than six figures, 47% reported living paycheck to paycheck, a jump from the previous month's 43%. So I'm just going to go ahead and round that up to 50%. So 50% of people earning six figures, over $100,000 a year, are paycheck to paycheck. What does that tell you? Listen, I'm here in the New York area. I stress this all the time, and I feel like I'm talking to into a void. I'm talking to brick walls out there. And, I recently looked up the price of these new cars. I mean, my God, leasing these cars, they're like, $700, $800, $1,000, $1,500 sometimes to lease these cars. And it's just insane. You could be house poor as well, but you could have your things that you're spending a lot of money on, but you definitely you got to rein that in. You got to pick and choose your battles, pick and choose what you want to triple your spending on to really enjoy in life. And you can't have everything, and it's just a shame, because six figures should afford you a good life in America. Even in the larger cities like New York, LA, San Francisco, and all the other major cities, but it just isn't these days. So next story, a Federal Reserve raises interest rates by 0.5 percentage points to curb inflation and predicts a higher peak. So consumer credit reporting agency TransUnion anticipates delinquency rates for credit cards and personal loans will jump next year to highs not seen more than a decade due to shifts in consumer behavior following months of surging interest rates and persistently high inflation. The company's 2023 consumer credit forecast released Wednesday projects serious credit card delinquencies will climb to 2.6% over the next 12 months, up from 2% this year, and unsecured personal loan delinquency rates are expected to reach 4.3%, up from 4.1%. TransUnion said delinquency rates for those categories have not reached that level since 2010. So, there's a few credit card companies that are banks that are having more of an issue. Goldman Sachs, for one, with the Apple Card, they have a very lenient approval process there. You only have to have a 600 credit score, and sometimes you accept lower. Capital One's another one. They're considered a subprime credit card issuer. They were going to have a little bit more of an issue there. So they might be in a little bit of hot water next year when they see a substantial percentage of, their card holders going delinquent. But we definitely got to keep an eye on that. Everybody's predicting next year is going to be a really tough year for the economy. So definitely have to brace ourselves. All right, next story. Credit card personal loan delinquency expected to surge. Right, so it's a separate story. So the Federal Reserve is growing slower, but aiming higher. So the Fed raised its key short-term interest rate by 0.5 percentage point Wednesday, dialing back from recent outsized hikes as it draws up an endgame in the aggressive campaign to tame soaring inflation. But the central bank forecasts another 0.75 point in rate increases next year, more than it previously estimated. The Fed officials are thus signaling they believe inflation is still too high and are backing off their hard-nosed battle to subdue it despite growing recession risks. All right, so guys, I really want to talk about this AMC card issue here. So AMC Theaters is launching a new branded credit card. The AMC Entertainment Visa card is what it's going to be called. Will earn AMC stubs points on purchases, whatever that means, with higher earning rates on AMC Theaters purchases, dining, groceries, and gas. Listen, those are good categories to earn bonus rates in, all right? Through a limited time offer, new cardholders will be able to earn $50 of AMC bonus bucks by applying. I love the names that they try to give to this. But bonus bucks is lame, right? That phrase is not, it's not going to catch on. But $50 of it as an entry bonus is not good. I mean, we're used to seeing $200 entry bonuses. That's pretty much the standard for the market is $200. So they're only giving $50 for their bonus bucks. All right, when opening a card. And you have to spend $50 within the first 3 months. So A-list and Premier members can redeem rewards for tickets or concessions. And so this is what Cinemadness said. This is what you are, an A-list member. I'm not sure what that entails as far as like what the what the requirement is to become an A-list. I don't know what the annual fee or something is attached to that, but that seems like a problem here. So A-list and Premier members can redeem rewards for tickets or concessions. Insiders can only redeem rewards for concessions. So that sounds to me, they're not clear details about this card around it yet because it hasn't been officially announced. But if you're an insider, that seems like that's the free tier. You only can redeem for concessions. That's a problem because concessions is, I think if my memory doesn't escape me, concessions is where they earn the best profit margin. That's where they earn a lot of money from. So you're paying an overinflated prices on those concessions. And some people don't even go to the concessions. They just go to watch the movie. So in that instance, you wouldn't even be able to use your rewards to at an AMC theater. That's a problem. So what I read about this card, I'm not a fan of this card. Listen, store cards, this is like the equivalent of it's a co-branded card for a specific company. Those are going to be a hard sell anyway, because you can only earn those rewards and redeem them towards one company. So that's got to be a valuable company. And I think for a lot of people, going to the movie theaters is not high on the priority list. Cinemadness, I know that you love this, but I'm not sure how many other people are going to be clamoring to have movie theater specific rewards. And what I read about this card is that this is just another effort for AMC to diversify their business model. So they're looking and they're basically clawing and looking out at the landscape and trying to see where can they kind of expand their business and be profitable so that they don't have to rely totally on ticket sales for movie theaters, because that's all they do. And I heard they're selling popcorn in grocery stores, and they're doing some other stuff. Who knows, they might come out with a NFT project. I wouldn't be surprised if I saw that. I know that they were leaning in hard to what is it called, the when that Reddit forum drove their stock price up, Wall Street Bets. I know they were leaning in hard to that, and I know they narrowly escaped bankruptcy. So listen, whatever you got to do as a company, but this is not it. So it's 2 thumbs down. This is not it. And I think you guys can agree with that. Let's see what the poll said. So we got 47 votes in right now. It's close to 50 votes, and 90% of you said that this is not a good idea. This is not a good card you want. So I want to know, basically 10% said it is. So if you think this is a good card, let me know in the comments. Why is that? Give me your best reason so we can argue that out, because I disagree. All right, next story. In a year marked by inflation, buy now, pay later is the hottest holiday trend. So the number of buy now, pay later loans grew more than tenfold during the pandemic. A U.S. government study shows from almost 17 million in 2019 to 180 million in 2021. This month, an Ally Bank survey found twice as many people using buy now, pay later than they did just in August. The appeal is obvious. At online checkout, most buy now, pay later companies typically let you pay a quarter of the bill or less, as long as you set auto payments for the rest. No interest, no credit history required. So I think that's the big key, right? There's 3 big keys for buy now, pay later I can identify. There's no credit history. That's going to let everybody in the door. That door is wide open. There's no interest, so you don't have to feel guilty. People will pay interest, but if you tell them there's no interest, that's guilt-free usage. And then it's right at the point of sale, right at the terminal, they're going to be able to use that card. So I think that's the trifecta that's really getting people in the door on these buy now, pay later setups. So in fact, stores might pay 2% fees for credit card companies to process transactions, but they pay up to 8% fees to buy now, pay later providers. Financially, that would only make sense if buy now, pay later encourages people to buy more than they would otherwise. So listen, that's exactly what they're doing. They're able to charge these fees because the buy now, pay later company goes to the merchant and say, hey, we can guarantee that when you use our service or offer it to your customers, they're going to spend a lot more. They're going to spend 10 times more, and they're going to spend more frequently. And if you can guarantee that, they can do their own calculation as to, whether that, that percentage fee is going to be a good deal. And they don't shoulder any of the risk, because as soon as you make the sale, the buy now, pay later company pays the full amount, and they have to manage the risk as far as, if that customer is going to repay that money to them. So they have to shoulder that risk. All right, so next story. Whom do credit card rewards programs really reward? So last year, according to a report commissioned by the Hispanic Leadership Fund and written by the economist Ephraim, okay, and you can see those words and how they're spelled, right? I'm not going to say those. So they went to the Wharton School. Credit card fees that caused Americans with family incomes of less than $75,000 to send a cumulative $3.5 billion to families with incomes above that level. So more than $1 billion of this total came from families making less than $20,000, and $1.9 billion went to families with incomes of $150,000 or more. Credit cards have been an agent of rising inequality in the business world as well as in the human world. So listen, I think this kind of speaks to, credit cards are typically, they're harder to get approved for. You have to have typically a credit score of 700 and up. Usually that's going to skew in the higher income brackets. And using credit cards is really a hidden tax on everyone. So, my feeling on this issue is that, I feel like you should, if you're in the position to use credit cards, you really should take advantage of the rewards that are offered, because you're going to pay for these reward systems anyway, because there's a hidden tax. It's imposed on the product. So whenever a merchant is forced to accept every single card, no matter what the fee is attached, they're going to have to pay an interchange fee of between 1% and 4% on all those purchases. They calculate that fee into all of their products and services. So we're all burdening the cost of the credit card reward system infrastructure. So you might as well take advantage of the rewards that all of these great cards offer. It definitely skews into higher incomes and tax brackets, unfortunately. And if you're getting value from this live stream and you want to see more streams like this, hit that like button. If you haven't yet, go ahead and hit that like button. I know you're in the chat. How many people we got in the chat right now in the on the stream? We have 82 people is what I'm seeing. Go and hit that like button for yourself, for me. You know what I'm saying? Go ahead and engage, we have a lot of knowledge in this stream right now tonight. It's good to see everybody. All right, so next story we have is for Wells Fargo. Judges report hammers 3 ex-Wells Fargo's executives. So 3 former high-level Wells Fargo executives may be forced to pay millions of dollars in penalties after a judge assigned them significant culpability for the bank's fake account scandal. The 3 executives will be ordered to pay a combined of $18.5 million in civil money penalties if the judge's recommendations are accepted or adopted by acting comptroller of the currency, Michael Hugh. In addition to 2 of them would be banned from working in the banking industry altogether. Wow, those are big. That last statement, being banned from working in the banking industry, that's a big deal. So I know a lot of you, Wells Fargo is notorious. I mean, I hear this come up maybe on a weekly basis. I see a post about Wells Fargo, and I think it's probably the most hated bank around right now. So I think it's the most hated bank. And you can let me know, how do you feel about Wells Fargo? I have the Wells Fargo autograph card, and I've enjoyed using that. I think it's a good travel card. It offers 3% cash back in 6 different categories, which I like. No foreign transaction fees. But I haven't had a bad experience with them, but I have a limited experience with them, you know? All right, next story. Congress should address the credit card charity swindle. So this is the first time I'm hearing about this. One strategy to streamline the giving process beyond donors choosing groups that spend money wisely is for Congress to pursue reform involving credit card fees. Under the status quo, anytime someone uses a credit card to donate, a portion of their contribution is diverted to the banks and credit card networks rather than the nonprofits. These swipe fees amount to 2% to 3% of the transaction total. How big is the charity swindle? According to the payment consulting firm, a majority of charitable giving in the U.S. last year was done via credit and debit card. And for that money, 4.9 billion was redirected toward card companies and banks. So what was that? So it said a majority of charitable, so over 50%. That's amazing. That's nearly $5 billion. Yes, $5 billion with a B that could have been better used by the intended recipient, nonprofit groups. Yeah, I tend to agree with, I tend to agree with this. I think it's a real shame how there's all these middlemen in the way of you giving to charity. We see this with some, you might have heard about that scam of what's it called? Established titles. That this kind of rings a bell for me of that, and how these companies like Omaze, established titles, they're getting in between you and the charity, and giving to charity is supposed to be a done deal. It's supposed to be very easy and seamless, and they should get 100%. But every time somebody's trying to get in the middle and take a percentage, take a cut, and that is a shame. I think I'm definitely for looking into ways to circumvent any sort of fees for charity. It should be feeless, fee-free, if you will. So next, guys, this is something that I kind of discovered on the forums recently this week that I thought everybody should know. So you know how everybody, okay, so first, let me say this. So here's where you can get all 3 FICO scores completely for free. So the FICO scoring model is what most banks use to determine your credit worthiness, not your Vantage scores. Your FICO scores are something that most companies try to get you to pay for, and those subscriptions can cost upwards of $20 per month. And here's exactly where you can find your score for each credit bureau. So for Experian, you can go to the Experian app, which is free. For Equifax, you can go to the MyFICO website or the app. All right, so MyFICO has a really great forum with a lot of information, but you can also get your Equifax FICO score from there on a monthly basis. And for TransUnion, all I could find was Discover and Bank of America so far that will offer you a TransUnion FICO score. So, a lot of people like to look at CreditWise, and they like to look at Credit Karma and so many others. Even Chase does this. They offer you a free Vantage 3.0 score. The problem is the Vantage score tends to be very different from the FICO score, and they don't tell you, but your FICO score is what all the banks are looking at. So even though they offer you the Vantage score, they're looking at the FICO score to approve you and give you credit limit increases. So it's good to know that. And so you can actually, just by virtue of using these 3 different sources, put together the complete package for free, and it's always good to see that, to make that revelation, or to find out that you can actually get things for free that companies are trying to get you to pay for. It's funny when you find that out. Richard Calaby, what's up? You said, doesn't Capital One have the CreditWise, which is a TransUnion FICO score tracker? I believe CreditWise, I thought CreditWise was for your Vantage score. I thought I could be mistaken, but I thought that was your Vantage score as well. Look, I could be wrong. So next story, Chase's 5% bonus categories for Q1 are Target, grocery stores, and fitness clubs and gym memberships. So from January 1st through March 31st of next year, cardholders of the Chase Freedom Flex or the Legacy Chase Freedom credit card can redeem or can earn 5% back on up to $1,500 in combined spending. This makes the first time that Target, including Target.com and the Target app, will be featured as quarterly bonus categories. So I saw a lot of people really concerned, and I was too, that these are pretty much, the grocery store category is identical to what the Discover It card is offering for Q1. So if you're a person that holds a Chase Freedom Flex and a Discover It card simultaneously, then you basically got 3,000. You got the same major bonus category, which is grocery stores. So, most people are spending around $500 a month on grocery. Now it's gonna give you the ability to spend $1,000 per month. So a lot of people are not going to be able to get maximum value from those two cards because they're offering the same thing, offering the same bonus category, which is a shame. All right, guys, and this is something that I wanted to share with you. There's another card. If this may interest you, it's not a terribly good card, but it's not a great card, but it does one thing well. So Deserves Digital First card guarantees your starting limit before approval. So the new Digital First card, it was launched early this year, but it's pretty new to me, and I think most of you probably haven't heard of it either. The new Digital First card is a virtual product. So there's no need to wait for a physical card to arrive in the mail. When you apply, you get a decision in minutes, and then you can instantly use the card to make purchases through Apple Pay with your phone. You can earn up to 1.5% cash back on those purchases. They provide soft pull pre-approvals from Experian and display your credit limit before you accept the offer. So that's the critical part. You get to see your credit limit before you accept the offer. So if you're really concerned about getting hit with a low limit, and you really don't want that because it triggered a hard pull, you can avoid the hard pull altogether by looking to see what your limit is, beforehand. And it's just a nice quality of life improvement. More cards should start offering this. So there's a couple bad things about this card. It only offers up to, so you should really look for language like this when it says up to 1.5% back. That means that it's not earning 1.5% back the entire time. There's actually a tiered system. So I think for the first $500, you're earning like 1% back, and then it goes up to like 1.25, and then 1.5 after you spend $1,000 in a month. And that's not good. Okay. I think objectively, that's not good. You can only use it with Apple Pay, as far as I know. That's a problem. Apple Pay is definitely, it's close to ubiquitous, but you need, an iPhone, and you have to be, you don't get a physical card. So that really, hampers where you can use this card. And then finally, one good thing I will say about this, because I actually got denied for this card. I wanted to see what I would be pre-approved for. And I think it was because of my credit inquiries in the past. I've had too many recent credit inquiries. And one good thing I want to see available or spread across the whole market is that it instantly, once you get denied, it'll let you know exactly why they denied you in just a few minutes. Like most cards, you have to wait, 7 days, 2 weeks to get something in the mail. It just lets you know. It had a laundry list of different ways that you could be denied, and then it tells you specifically why they denied you. So I like that. So you know exactly where you need to improve to get accepted by that specific credit card issuer. So I definitely appreciate that. Jewel Clark, I see you there. You said, please explain getting your FICO score for free. I'm going to go back after I finish the slides. I'll go back for you. Okay. And then next story, New York passes gift card law regarding expiration and fees. So yeah, if anybody's in New York, let me know right now, please, in the comment section. Shout out to New York. What borough are you in? I used to live in Brooklyn and Queens, but now I'm out in Long Island. So New York has a new law that aims to tackle exploitative gift card practices by limiting fees and extending expiration dates. The new law, which is already in effect, states that any gift cards or certificates purchased in the state are valid for at least 9 years. That's huge. That's like, what is it, a decade? from the date of purchase. According to the state's Division of Consumer Protection, that extends the previous rule by 4 years. In New York, when the remaining value of the gift card or gift card certificate is less than $5, the recipient can opt to receive cash for the balance. I mean, that's been a hard thing for so long, right? Is you never use the totality of the gift card, right? So that's been a problem. You have to use like services like Card Cash, but they're going to charge a fee for using that. So you never really get the total. I think the best way to handle gift cards is to probably just go ahead and use it if you can. If you have a gift card that is, I forgot the technical term, but if you just go ahead and buy an Amazon gift card, just add that to your Amazon gift card balance. That's the way I get money off of cards real fast. But for gift cards that you can only use at one location, then that's not going to work. So all fees are prohibited under the new law, which will prevent gift cards and gift certificates from declining in value. All right. So the law specifically forbids the imposition of any activation fees. Awesome. Retroactive fees, redemption fees, all the fees, guys, all the fees are not allowed here for the most part. There is one exception to the law. A gift card or gift card certificate is redeemable at multiple unaffiliated merchants or service providers may charge a one-time activation fee not to exceed $9. So that's the kind of card that I was speaking about using for Amazon just to get that money off real quick. But that's good. Listen, there's a lot of things to not like about New York, but one thing that we will do here is pass some consumer-friendly laws, right? We will do that. And I got DJ Bruce Wayne said, Brooklyn, New York, stand up. I see you, DJ. Right of the line said, gift cards in Florida have no expiration. Okay, nice. That's what you want. That's really what you want. Some protections there. So next story we have the Apple Card has a $75 sign-up bonus after your first purchase. So one thing I wanted to know, I usually don't do these types of stories, but Apple Card is huge, right? A lot of people have it. $75 is their largest bonus that they offer. They seem to be cycling these bonuses throughout the year at big periods of the year, and they're not always present, unfortunately. I wish they would just go ahead and give a $100 or $200 bonus, but you know, it's Apple. They're not going to give you the standard rate. And it's good that there's a low threshold, low barrier to entry here. All you need to do is buy one thing. So that's how you get it. And finally, if you haven't yet, go ahead and sign up for my newsletter and get your 12 credit limit increase strategies cheat sheet. And you can get that in the pinned comment on this stream. All right. It's the pinned comment on the stream. Go ahead and sign up and you can get this cheat sheet, give you 12 different strategies in general that's going to cover credit unions and standard credit card issuers together. And let me go back to for Jewel, I believe it was Jewel. So you can get all 3 FICO scores completely for free from Experian. For Experian, you can get that from the Experian app. Equifax, you can go to the My FICO app. And for TransUnion, you can get it from Discover or Bank of America. So if you have you must have a credit card with one of those banks to get access to it. But if you do, then you can get your TransUnion FICO score. And let's see. And Junior, you said, doesn't SoFi offer free credit monitoring? They do, but that's going to be your Vantage 3.0 score. And that's typical for so many credit card issuers. They always offer the Vantage score. And I think this is kind of tripping people up, because when I look at my FICO score and my Vantage score, there's usually like a 20 to 30 point difference. It's pretty drastic. So you need to be looking at the right score so that you know your likelihood of, you need to know where you stand. Right? You need to be able to measure your performance. Otherwise, you don't know what you'll be approved for and what shape you're in, right? But I saw a lot of people saying, so I have this, I've been really debating on who should get this extra credit card, or extra, what am I saying? Credit card, the extra wallet. This new extra wallet that I was giving away, right? Looks like this. Metal wallet. Let me turn it over. So I want to say, yeah. So it's for anybody who actually subscribed to a new subscriber over the last 2 days to my newsletter. And I'm going to be giving this, right? And I have a new subscriber to my newsletter. And it's going to be Whitney. All right. I don't know the last name, but Whitney, expect an email from me. You left a recent comment. Definitely move me on YouTube, and you'll be getting this wallet. So expect an email from me. Don, I see you said Don just let me subscribe. I would listen. I posted on my community page. Man, I wish you saw it. Man. But it's, if Whitney accepts, I'll be sending it over to Whitney. So, guys, everybody. DJ Bruce Wayne, you said, what's the discount code? I believe I can get a link for you. I have a link somewhere. I have to find it for you. I want to know about your wins. Let me know about your wins over the past week. What have you got approved for? Any cards that you got approved? Any new credit limit increases that you got approved for? Plumber said, I'm gardening. All right. So if you're new to the credit card enthusiast space in our sphere, gardening just means that you're taking care of yourself. You're not applying for anything new. You're in the garden. You're just minding your business. You're not trying to do any damage to your score. You don't need new cards. You got a decent setup. All right. So Danny Boy, you said, I just got a $2,200 credit limit increase on my Amex Business Blue Cash. I believe that's it is. All right. You know what time it is. It's time for the money gun. So $2,200, Danny. That's for you, Danny. That's for you. You got the money. All right. So we have the only Derek. You said you got a $4,000 increase. And what card was that with? Congratulations on that increase. The only Derek. I like it. Don Johnson. Capital One Venture is the champ. Has excellent benefits. Increased to $30,000. I'm only at I think I'm at 18,000 on my Venture X. You're making me look poor over here. Okay. 30,000. That's amazing. You know what you get? Two-handed. Junior said, are we seeing the end of Priority Pass after the VentureX discontinued all of its free lounge benefits? So you got to fill me in here, because I was under the impression that they just discontinued their the food portion, the food benefits with the lounges. So you couldn't get the free food in the lounge. You didn't have a $25 or whatever stipend to pull from, but you still have lounge access. I think someone said that they think that the lounge access is being changed because that's a benefit that's offered by the payment processor, which is Visa. Visa is in mostly control of lounge access benefits. And so if they make a change on the payment processor level, it'll affect all of the cards that have lounge access. Johnny Jimenez, You said VentureX credit limit increase of $1,000 from $20,000 to $21,000, and a Saver One credit limit increase of $750 from $10,000 to $10,750. Nice. So you got a 2-for-1. You got 2 increases at in 1 week. Awesome. Johnny, I'm gonna turn it sideways. You gotta turn it sideways for the kill shot. All right. Rolla Addict. As for wins, I got a $8,000 limit increase on my Discover It card at $24,000 limit. That's huge. $8,000. I didn't know they were going that high with their increases. That's similar to Navy Federal. Navy Federal gives a max limit increase of $8,000. That's awesome. Congratulations.
Oh, wow.
Darren Hilton said, that money gun is a YouTube first. That's genius. Well, listen, I can't take all the credit, Darren, because the money gun, I actually got this from another YouTuber I actually learned a lot from. He does smaller streams, but I thought it was huge, so I had to steal it. So I'm always on the lookout to take good ideas. But thank you. All right. Okay. Junior, you said watching your streams is a win. Listen, Junior, thank you, Junior. I'm trying to make this better. Going into next year, I think it's gonna be. I'm gonna continue doing these every week. I will be skipping the next 2 weeks. Obviously, you got Christmas and New Year, so I want to go ahead and wish you guys a Merry Christmas and a Happy New Year. But I'll be coming back on the New Year strong. We're gonna keep doing these every single week. And I actually started ripping the audio from these live streams and putting them into podcast form, so you can find those on your podcast apps as well. All right, so Don Johnson, you got a Navy Federal Credit Union $8,000 limit increase. Don, that's awesome, dude. And Navy Federal, listen, Navy Federal is like a fan favorite, and my next video is gonna be on Navy Federal, so definitely be on the lookout for that. It's gonna be about a guy who got established their relationship with Navy Federal and got 2 cards and a total of $50,000 in credit within 7.5 months. So be on the lookout for that in the next few days. Darren Hilton, I want to thank you. Listen, Darren, I appreciate you. Thank you for the super chat. You said thank you for your hard work. Listen, I'm glad that you noticed, and I'm over here working. I appreciate you. And Danny, listen, always, Cal, which payment network do you prefer? Amex, Visa, Discover, or MasterCard? Oh, man. Thank you for the super chat. Oh, thank you, Danny, for the super chat. I think I prefer... I can't say Amex, even though I have 2 new Amex business cards. I'm not gonna put down Amex. I know that they're a little bit more. Amex and Discover are not as widespread, especially worldwide, but they're almost there. I'm gonna say Visa just because Visa is accepted at all the merchants, and Visa is accepted at Costco. I know that's a big deal for many people. I don't personally shop at Costco, but I like that they're accepted there as well. But I would say most of my cards are actually MasterCards. I'm gonna say Visa is my favorite, just because it's accepted. And Benjamin Wiki, you said thanks for the great info. Benjamin, listen, I don't think I've seen you before, but thank you for joining the stream. And also F Davis, my guy F Davis, you said Merry Christmas, Happy New Year, see you in the new year. F Davis, thank you for the super chat and supporting the channel. It means a lot to me. Okay, so I'm gonna talk about a few things here. Q Smith. Oh, Q Smith. Did I get you? Where are we at? I'm newer to the credit card game. I appreciate your content. Okay, I thought it was a question. I wanted to make sure I focused on it. Q Smith, I appreciate you letting me know that I'm having a positive effect, and thank you for watching my videos. Junior, you said top credit cards of the year. You know, I covered this in another episode, but I can try to pull that up just so I can. But just going off the top of my head, my top cards are definitely going to be the Citi Custom Cash Card. You're getting 5% back in your top spending category. And I have 2 of them. So I just used it at the grocery store and I pretty much maxed it out every single month. That's nice to have. That's like an automatic 25 bucks. I like the VentureX card for travel. So for flights, you're getting 5% or 5 miles per dollar spend when you use the travel portal. And then for hotels and rental cars, you're getting 10x back. And then as a travel tier right below that, I'm gonna say the autograph card from Wells Fargo, and that's gonna be contentious. And then what am I missing? I'm missing something. You definitely have to have a 2% flat rate card to cover all your other purchases. So I'm gonna say my SoFi card. I've been rocking out with SoFi for 3 years now, and I'm still good with them. I like that I'm able to redeem my rewards automatically. So I'm definitely gonna say that 2% card from SoFi is my favorite. And you notice the trend here. I'm mostly cash back. And I will say that, and I can actually pull up that live stream slide for you just to jog my memory. Hold on. We're gonna get to it because I know Danny actually proposed this. It might take too long. But let me just look through my cards. What do I have in my wallet? I have so many wallets, Junior. So many cards. Looking through right now. What I got here? Just got the Discover It card. I wouldn't say that's the top 5 for me, but I do like it. Oh, yeah, a US Bank Cash Plus for me personally. The US Bank Cash Plus card, I use that for utility payments. And that's one of the only cards that you're going to be able to earn 5% back on utilities. That's kind of a category that goes underserved. Don Johnson, listen, thank you for the super chat. You said, Cal, could you explain balance transfers to 0% APR cards, i.e. penalties, fees, etc.? All right, so yeah, usually with a balance transfer, I list that as one of my points. I just want to preface by saying a balance transfer is something that's typically looked at as like really favorable to the credit card issuers because it's just more, it puts more spend on the card, and it's another feature of the card that they push because it's profitable for them typically. So I identified that and I made sure that was on the list because that does help you get credit limit increases. Now, usually a card will have a 0% APR period of like 12 to 15 months. And as long as you pay that balance off before, that the 12 months run out, you won't pay interest on it. But there is a penalty, or there is a fee. Usually there's 2 fees attached. You're going to get a percentage fee and or a flat rate. Usually it's one or the other. So there might be like it's usually like a 3% fee attached, something like that. You have to look in the terms of each card is going to be slightly different, but there will be a like 3% fee attached to that. But as long as you pay it off in the set time frame, there won't be interest attached. So you only have to worry about that small fee. Danny Boy said, I love my SoFi card. A lot of people listen, SoFi is getting a little flack. I still like SoFi. I started with a $10,000 limit. The problem is that it doesn't grow with you. So they still don't offer credit limit increases. And unfortunately on the subreddit, they still keep telling people that it's coming soon. They haven't done any major updates to the SoFi card. I'm like, I thought when they launched this card, because it seemed like they were updating it frequently, and then they just stopped. And I don't get it. I really don't get it. Right of the line said, do you have that many cards, or did you keep the foam insert in the middle of the binder? I have probably like 30 cards in here, and some of them are like discontinued, or you know, I just haven't like cut the card up. Some of them are like, I have an old saver card, and I actually canceled that card, and it's metal, so I could have sent it back, but I just haven't gotten around to taking those out. So I would say about half the binder is full of cards. You said, what's the best grocery card? The best grocery card for me is the City Custom Cash card. Just because I can just use it for grocery one month, and the next month I can use it for dining or use it for gas. I just like that as a grocery card. I think there's an Amex card that could be good for grocery. I think the Blue Cash Preferred gets 6% back in grocery, if I'm not mistaken. So that's going to be good as well for grocery. And yeah, I think that's going to be what you want to use for grocery there. Listen, guys. SM, what's up? I haven't seen you here, so welcome to the channel. You said, what are your thoughts on the built card? All right, so I've been actually surprised at how many people are interested in the built card. So the built card is not for my demographic, just because I'm a homeowner, so I can't utilize the feature of using that card for, you know, rental payments. Unfortunately, I wish you could use it for mortgage payments. That'd be awesome, because I earn a lot of money, because you know the mortgages up here in New York are expensive. But you know, it seems pretty good, because you're earning, at least you're able to earn something on those rental payments, and that's everybody's biggest bill for the most part, is going to be rent, is going to be housing. So I'm a fan of it from that perspective. But I know it has some other features where I think pooling other points together with other like Wells Fargo cards, I have to kind of brush up on the specifics of that card. But if you're just looking at the main benefit, which is for rental payments, I mean, it's a no-brainer. You got to get it and use it for that purpose. It makes sense. Yeah, Don Johnson, you said, is there a card you can use for mortgage payments? If there is, I haven't seen it. You know, I've been looking at articles and forum posts and videos for so long now. I still have yet to see a mortgage payment. Everybody talking about mortgage payments usually talks about plastics. If you haven't heard, or plastique, and if you haven't heard about it, it allows you to use a credit card to have them cut a check and pay mortgage payments and other types of payments that don't accept credit cards, but they will charge you like a 2.8 or 3% fee on top of that. And Dark Dude 2000, listen, it's early Christmas here. Thank you, sir. Dark Dude, thank you. It's a Merry Christmas here. Cal, been good rolling with you this year. Merry Christmas. See you in 2023. Yes, definitely. We're going to be going strong in 2023. And thanks to you. The best said Venmo is no good. IRS Army after those cards. The IRS Army is, they have I like how you characterize the IRS as an army, because they literally have tens of thousands of new hires and people looking to get, I think it's like if you spend over $600, or if you transfer over $600, then they're gonna look at you. They have to basically, it has to be filed to the government so that you pay taxes. That's a little much, right? That's a little too much. Is there, I should definitely post a poll about that. Thanks for raising that issue. Yolanda, you said hi, I'm new here. Listen, Yolanda, you're always welcome in the stream. Welcome. It's good to nice to meet you. Junior, you said, doesn't the Double Dash card earn 2% on rent payments as well? Well, listen, anytime you pay a rent payment, typically there's going to be a fee attached, a processing fee, and it's going to be attached to that, and it's going to exceed that 2% that you're earning with any card. It's going to be higher than, because they're not going to take, they have to pay an interchange fee for accepting credit cards, and they're not going to, they don't want to kind of relinquish that profit. And thank you everybody welcoming Yolanda into the chat. I'm glad that somebody, that we have such good people here and helping each other out and welcoming others is really good to see. Thank you guys. And listen, I'm still going to be making videos. I have a few. I'm actually going to be ramping up production next year. I'm basically developing a pipeline of putting basically a assembly line into place so that I can get more videos out. And thank you for hanging with me. The next live stream is going to be on, let's see, I'm skipping the next 2 weeks. The next live stream is going to be on January 8th. So be on the lookout for that, and go ahead and, schedule that stream. It's going to be January 8th. And listen, everybody, it's been real. I want to say Merry Christmas, first of all, and then Happy New Year. All right. I'm going to see you in 2023. Have a good night, everyone.